Americans donated more than $3 billion on Giving Tuesday last week. Many more people will donate to other organizations and nonprofits before the end of the year. This afternoon, our financial expert, Paul Hood, is here with us to break down a few things we need to keep in mind when it comes to our taxes and charitable donations. Paul, thanks for being here.
You bet. Thanks.
This is a very interesting topic to me. What are some of the benefits with taxes when you donate to a charity?
Well, a lot of people don't understand there's actually some good planning that can be done. See, our tax system, whether it's estate taxes or income taxes, are redistribution of wealth. Meaning you did good, take your money and give it to somebody else. So the reason we get a deduction for charities, giving money to charities, we're voluntarily redistributing our own wealth. And so we get to take a deduction for it, and there's certain limitations. But there's planning that's involved. See, a few years ago, they increased the standard deduction, gave everybody a pretty good increase in deductions, which makes it harder to itemize. So mortgage, interest, charities, property taxes. So what we teach a lot of people is double up. So maybe 1 year give double charities, the next year skip. 1 year give double if you're trying to do tax planning. You can do things like if you've got, if you're taking required minimum distributions, say you're over 72 and you're taking money out of your IRA, you can give that straight to a charity. And not have to pay taxes, you don't get a deduction, but it's actually better doing that.
Okay. You know, if I'm thinking about donating to a charity, what are the documents or receipts? What do you need to keep, and what do you need to keep in mind if you're doing that?
So you have to, the charity, to get a tax deduction, they have to be recognized under Section 500 of the Internal Revenue Code. Most are 501c3s or churches or whatever. So they'll give you a receipt that says they're tax exempt, and then you can deduct it that way.
Okay. And then speaking of churches, a lot of people give, tithe out there, they give to a church. Is there a difference tax-wise when it comes to churches and say you're donating to somebody else like the Red Cross?
So those type, no. With the IRS, though, there's something called a private foundation, which means if they get most of their donations from one or two sources, then if you donate to that private foundation, your deduction is limited to 30% of your income. If you give to church or Goodwill or Salvation Army or what have you, then your deduction is limited to 50 or 60% of what your income is.
Okay.
But now there's a couple planning tools, though. One is be sure you clean out your closet at the end of the year. Take your stuff to Goodwill or wherever, and you can get a pretty good deduction. It's thrift shop value. Secondly, a lot of people have highly appreciated assets. Maybe it's stock or whatever. And you can donate that highly appreciated asset to a charity and deduct the fair market value. So let's say you have stock that you paid $10 a share that's worth $40 a share. If you sell that stock, you pay taxes on 30, and then you get the deduction for the cash. If you donate that stock, you get the donation at $40 a share, and you never pay taxes on it. So there's some planning. Sit down with your CPA and see what you can do to maximize it.
Okay, very interesting stuff. Paul, thanks. We appreciate it.